Hello, my name is Ken Dean with Advisors Capital Management, here today to talk to you about our ACM Pathfinder solution for held away accounts, working with participants through their self-directed brokerage account option within a 401k, a 403b, 457, or 401a. Our objective, to help your clients and prospects where they need you the most, to help them build for retirement instead of just starting that focus with a year or two left in the workplace with limited time to save for their nest egg. We want to help increase your assets under management, assets under advisement, and fees. More wallet for your typical client and easier referrals from with the people that they work with. We want to make sure that you are the advisor on your client's most important asset. Most Americans believe that their 401k is their most important savings and investment tool outside of their home. And we want to make sure that you are their most important advisor. And to be their most important advisor, we need to make sure that you can help them on their most important account. Pathfinder simply legitimizes you and keeps you compliant on that client's 401k, 403b, 457, or 401a. We do this without a rollover. We do this without an in-service withdrawal. We are legitimizing you inside of their current structure. We, ACM, does the active participant level account management. We pay you a promoter fee of 80 basis points. That is an annualized fee and gets paid monthly. There will not be a line item fee deduction on your client's accounts, and we do not need outside billing. The average cost to your client or these participants will be about 182 basis points. That's all in. Keep in mind that this replaces, in most cases, the plan expenses, which for the average American are close to 1%. So we're replacing their 1% with 182 basis points that includes you and ACM to help be there for them, make sure they're invested properly, check in with them at least once a year, and get them to retirement on time with more money. For what it's worth, there are no minimums on most plans. The opportunity is nearly endless. Over 100,000 plans offer a self-directed brokerage account option. They have plan assets of over $4 trillion. So you're talking about an enormous market of pre-retirees. The average Fidelity 401k is now larger than the average Fidelity IRA, and yet most advisors focus on the IRA instead of helping those active participants build larger 401ks before the rollover or in-service withdrawal. The average participant in America contributes nearly $12,000 per year with match. So instead of a hole in the bucket where people are looking for income, these accounts grow with ongoing contributions. According to Kiplinger, the self-directed brokerage account is a retirement's hidden gem, gives those participants access to independent financial advisors, ditches the one-size-fits-all approach of target date funds, helps them to avoid emotional investment mistakes, and allows them to keep more of what they earn. Self-directed brokerage accounts, those 100,000 plans, are spread out through most major employers, including health systems. I believe it's 27 of America's 30 largest health systems offer their participants a self-directed brokerage account option, and we can work with most of those. In education, in addition to over 6,000 K-12 plans, we can work on many of America's largest college and university 403Bs, ARPs, deferred comps, and other types of defined contribution accounts. Over half of America's state and Commonwealth deferred comp plans offer a brokerage option. Moreover, hundreds, if not thousands, of city and county plans offer a self-directed brokerage option as well. Lastly are the corporations. And yes, we can work with the majority of the Fortune 500, and in addition to those, over 99,500 other plans. So as you start thinking through your book of business, who do you know who works in healthcare, who works in education, who works for a municipality, or has a 401k through one of these corporations, and there's a good chance that you and ACM can work together to manage and give advice to that participant on their most important asset. These clients, these participants, they want help, they need help, they deserve help. Pathfinder is a vehicle to deliver. 84% of Americans report feeling not very confident on their retirement investment strategy. 84%, according to Cerulean Associates. And 3 out of 4 tell JP Morgan that they want professional investment advice on their 401k. 3 out of 4 people want help with their 401k. And your advice matters. According to Russell and Vanguard, Financial Engines, Fidelity, and more, your advice to these participants on their 401k is worth about 3% per year net of fees. Mr. and Mrs. Client, I'm going to be here to take care of you. Make sure you're invested properly according to who you are instead of an arbitrarily dated mutual fund. I'm going to be here to not only answer your questions, we're going to get together at least once a year, and your money stays in your plan. So if anytime you don't like what we're doing, you can turn it off. Sign here. Simple, straightforward. They get the same statements, they have the same login, and they get access to you, which they truly want. Advisors are worth about $1.3 million over a 30-year people. So people who have a 401k, work with a financial advisor, retire with an extra $1.3 million after that 30-year period, according to MoneyWise. You send us an email. Dear ACM team, can I work with this employer or that employer? We tell you yes or no, or we need to do more research, and then we send you the paperwork and process for the plans we can work on. It includes a 3-step process that's pretty straightforward, and in most cases, includes DocuSign. We want to help you build enterprise value, help build your business as a small business or an independent financial advisor. This is an illustration. 2 new accounts, SDBA accounts per month at $200,000 with $15K per year in average annual contributions and 7% market growth. That's a $100 million side book of business for financial advisors over a 10-year period, $20 million alone coming from contributions. It is a new growth tool for many advisors. Last year, over $1 trillion in rollovers, only 22% were influenced by an advisor. We want to help you increase that percentage. And in addition to rollovers, we want to help you get life insurance and 529s from new parents because you're managing their 401k. We want to help you with that inheritance because you are their most important financial advisor, helping them with what they see as their most important asset. The Pathfinder difference, 16 plus years of experience and knowledge specifically in this space. A lower cost option to your clients with the average expense being around 182 basis points. A higher promoter fee at 80 basis points annualized and paid monthly. Access to almost every major plan custodian, including Empower, Alight, and TIAA, who are all 3 are top 5 record keepers in the United States, and access to plans which restrict third-party trading access. All you have to do is send us an email, plancheck@advisorscapital.com. Let us know who you are, where you live, and if there are any plans specifically you'd like to know more about. We'll follow that up with a list of some of the largest employer plans in your area, which we can work on. We thank you for your time today, and we look forward to the opportunity to work with you moving forward.